You might know Michael Burry from the movie starring Christian Bale, made after the book The Big Short. Michael is well known for being the very first investor to foresee the 2008 crisis. The Big Short is a book written by Michael Lewis, which documents the mortgage crisis that happened between 2007 and 2010. Now, the same investor who predicted the market crash of 2008, Michael Burry, has sold off 999% of his company's stock holdings. He got rid of all stocks except for one. This will surprise you. He also warned that winter is coming. Welcome to Wisdom Tank. Today we're going to take a look at Michael Burry's recent stock holding sales and why he only kept one of them. Stay tuned until the end to learn which was the one stock he kept and why. Don't forget to like, share the video with friends, and subscribe with notifications on. Thanks for your support. Now, back to the video. As we've previously mentioned, Michael Burry is the famous investor who managed to predict the 2008 market crash, something nobody else really saw coming. Now, he is the head of Scion Asset Management investment firm. The company held upwards of $165 million in U.S. stocks at the end of this year's first quarter. But by the end of the second, all stocks but one have been sold off. This information is according to the firm's filing with the SEC. That's the U.S. Securities and Exchange Commission. The more you know. Burry's firm Scion sold its positions on 11 U.S. equities during this year's second quarter. Among the ones that were sold off, Alphabet, Google's parent company, Discovery, Meta Platforms, AK had Facebook's parent company, Cigna Corp, and a couple others are notable examples. Combined, these stocks were worth well over $165 million. By the end of the second quarter, Burry's asset management firm only ended up with one stock holding left. They even doubled down on it, adding 501,360 shares. We're talking about Geo Group Incorporated. This is a healthcare company based in Florida. According to its website, it specializes in community-based programs, electronic monitoring, in-custody rehabilitation, and post-release support. Geo Group should feel good about the trust Michael Burry has put into it by investing a large sum of money in the midst of selling off all other stock holdings. He certainly saw something in it most people don't see. After all, Michael does have quite an eye for extremely profitable investments, and a lot of people are copying his investment moves, hoping to earn something for themselves. Michael Burry always has a ton of followers in the space who believe in him and trust that each and every investment made has been carefully thought through. Now, people in the investment space are alarmed by his recent stock sales. And why wouldn't they be? The Scion stock holdings sell-off has made huge waves among investor groups. But not just big groups have been paying attention to what Burry is doing. A lot of smaller investors have followed suit and decided to sell their stocks too. But is this a good idea? Let's see what Michael Burry himself has to say. In a series of tweets, the head of Scion Asset Management has tried warning people of upcoming market crashes. In his most recent one, he talks about a recent rally in the tech-heavy NASDAQ. He believes it will be short-lived, writing, "Can't shake that silly pre-Enron, pre-9/11, free, WorldCom feeling." This quote has led many to believe a huge dip in the market is coming soon. And who knows? It might. Another one of his recent tweets reads, "NASDAQ a bull market because it is up 20% off its low." Who makes this stuff up? After 2000, the NASDAQ did that 7 times as it fell 78% to its 2002 low. Michael Burry seems keen on the possibility of a huge market collapse, pointing out that some people are misinterpreting the signs viewed in stock charts. But he didn't stop there. He then stated, "Contrary to the internet and the Twitter sphere, there have been bear market rallies that eclipsed 50% retracement and led to a lower low." He also added that most of it depends on how you define a rally or cycle. He also gave 4 important dates as examples, all definitory turning points for the world's economy. He listed April 1930, November 1938, June 1946, and November 1968. But why does he believe the market is going down? What's his reasoning behind his now famous statement, "Winter is coming"? He puts the seemingly upcoming market crash on the back of consumers who fail to manage their balance in times of rapid inflation. Net consumer credit balances are rising at record rates as consumers choose violence rather than cut back on spending in the face of inflation. We now find ourselves in a time of rapid inflation, which Burry partly attributes to the post-COVID spending. He refers to this spending as addictive and considers it a major issue for people with limited budgets. But not only that, a severe crisis, resembling the one in 2008, could drastically change the livelihoods of millions, if not billions of people, and could even bring down major companies. At the time of making this video, it's been less than a week since the pinnacle of Burry's "winter is coming" style tweets. We're hoping nothing bad happens to the stock market in the following months or years. But if you're watching this a couple years from now, write in the comment section what actually happened. If you're now from the future, then what do you think? Is Michael Burry right? Will the market crash this year? Let us know your thoughts in the comment section below. If you enjoyed the video, make sure you like, share, and subscribe with notifications on, so you don't miss future news and opportunities like this. We'll see you next time on Wisdom Tank.